What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPY for the S&P 500 ETF. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about the market regularly here on the channel, as well as in-depth every Wednesday and Sunday over on the main channel. With that kind of out of the way, what did we get on today's session? Definitely just an inside day of consolidation. We were almost entirely constrained to the overnight range as well, so a whole lot of balance. Right? It really wasn't an aggressive day up or down. So don't let anyone fool you into saying, oh, wow, that end of day sell-off really damaged the charts, right? It just simply isn't the case. We're still well above the balance highs from in here. You could start to look at this as a double bottom. Some people are looking at it like that on smaller time frames, a higher low double bottom. You could just start to think of it as an area of balance like this. We got the break. Here's the retest. Now the question is, do we reattempt the resistance trend line and make an equal high? To me, that starts to change the trend back to maybe higher instead of being more neutral to bearish. So we'll see one step at a time. We, of course, have to recapture that 450 big area. Remember that that is an all-important zone based on the prior supports. And then that's where the selling really accelerates from. Lower high did, puncture that already once. So to me, a recapture of that easily takes us to that lower high. And just to give you an idea of what that number is, that's 457.50. Let's just throw it on there so we have it on our charts. So if we can get out of the 3-day balance to the upside, that's the first target. After that, a recapture of 460.25. I would love to see some more consolidation there. And then the sort of move up to that next target, closer to 370.50, one step at a time. I just don't want you to be overly bearish because we have a red candle. Think about location. Think about what didn't happen, right? If the sellers were going to be aggressive here, they probably should have closed it closer to Friday's low, taken out the daily 200 SMA, attempted the top end of the balance in here. We just simply didn't get that. So to me, the sellers are a little bit weak, but also, again, we can't discount the fact that the buyers are also weak because they were not able to close back up towards the highs of day. They were not able to close up towards 450. So it's a patience play here in the S&Ps. As long as we're in between these two critical areas, 450.75 and this 443.50, I think it's a patience play. I think you get ping pong back and forth and a more directional move will be produced either up and over or back down into this prior area of balance right here. As of right now, this is striking me as a little bit more healthy for the bulls, to be quite frank with you. The fact that the sellers aren't really taking much action here. But again, no one knows the future, right? I'm just thinking about it in terms of how I would position myself. That's how I am thinking about it. You can do as you would please. Take this analysis with a grain of salt, of course. Let's go ahead and take a look at the 30-minute time frame. And again, really just a lackluster range today, completely contained inside the prior day's range. Not much to do, right? We basically hit it on the daily time frame. Not a whole lot extra to read into here on the smaller time frame. So that's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.